Good morning, everybody. Just bringing up some of our speakers for today. I do see Sean, and I see Daily Trader account, and I see stock market news, so I think we are looking pretty good. Evan, just to warm us up for a minute here before we go to Sean, do you want to start us off with some of the news this morning?
Yeah, so I do got you. So I am not as in front of my computer as always. I'm actually in Miami right now. So doing that, but I can't stay away from the news and everything for too long. We did have Walmart earnings this morning. EPS was a beat. Revenue was a beat as well. And let me get the forward guidance in front of me. I'll read you off that at the end. Alibaba also reported earnings. EPS was a beat. Revenue was a slight miss. They were going forward with one of their spinoffs. I believe it was the Intelligent Cloud Unit that will be done through a dividend. Elizabeth Holmes is going to prison on May 30th. We have Too Simple, ticker TSP. They announced today plans to cut 30% of their workforce. This move comes a couple days after they received a delisting notice from the NASDAQ for not filing their quarterly report on time. So that's definitely something you should be keeping on watch. We did also have a little bit of Fed speak from this morning. We have Fed President Logan saying that current data doesn't justify a rate pause, which is kind of against what the market has been thinking and seeing, and we'll see how that one develops. And then we also had Fed's Jefferson say 1 year isn't enough, long enough to feel policy effects. Inflation is too high and progress has been slowing. Demand has clearly begun to feel the effects of rate hikes. So the Logan comment was definitely a little bit more hawkish, saying that we don't know if we paused yet. And Jefferson maybe was a little bit more in the mixed dovish camp there. So definitely some stuff to keep on watch there. As far as news from overnight, we had Cathie Wood and ARK Invest buying 1.3 million shares of Palantir yesterday. We had Montana's governor signing into law a ban that would a bill that would ban TikTok outright in the country, in the state. Jesus. The Montana ban is expected to go into effect January 1st, but it probably will be facing a tough legal fight and could get delayed or canceled in general. TikTok did come out with a statement, and then they said they believe the law infringes on the First Amendment rights of all people in Montana, but a couple more stuff to watch there. We have Charles Schwab looking to raise money by selling debt. They're looking to raise about $2.5 billion in a long-term debt deal. We have Netflix coming out and saying their advertising tier now has nearly 5 million monthly active users. The wording was monthly active users and not subscribers, so I don't necessarily know how that caveat works, but interesting there. We have Take-Two. They did have earnings yesterday, and they were numbers. But the part that was interesting for me specifically was GTA 6. And based on some of the wording, I'll read you a direct quote. We believe that we will enter our next phase of growth in fiscal year 2025, and that is between 2024, I believe, April to April 2025. But as we plan to deliver several groundbreaking titles that we anticipate will set new standards of quality and success. So I really think there's only one game they're going to be talking about there, that is GTA 6. And then finally, there was a partnership between NVIDIA and ServiceNow yesterday. They're doing some stuff with AI, but I think the part that was really interesting for me was when Jensen Huang, NVIDIA's CEO, was getting interviewed on CNBC, and he was kind of talking about the power of what they've done, and he said that we have reinvented computing for the first time since IBM System 360, which is quite the statement coming out there. And yeah, it's an interesting one. But yeah, a lot more to watch today. Walmart and Alibaba earnings I'll dig in a little bit more into, and we can talk more about that after forward guidance and all that other good stuff. But yeah, I think that's pretty good for me for now.
All right, fantastic. Thank you for starting us off there. I'm also bringing up Dynatrades. I do see you in the audience. We're going to get you up here. Thanks to everybody that's already joined in to the space. Nearly 100 of you already here. We're excited to have you with us this morning. Let me touch base here with you, Sean, and get some overall, bits and pieces of what you plan on covering today, and also just a little bit of introduction of yourself to the audience.
Sure. Thanks, Gav. How are you?
Good.
Good. Eric, Evan, how you doing? I'm Sean. I'm been a psychotherapist for 20 years. I'm a trade psych coach these days. And today we're going to talk a little bit about trading psychology, my background and how I got into it and my approach to it. And of course, talk markets. We're also going to get into some of the workshops that I do with Elite Trader Funding and see what the market brings as we open up here. I can tell you personally, I'm watching pretty closely the area that we just tapped. We had some single prints yesterday, um, and I'm hoping that the shorts hold up the market and we keep this little trend going that we started yesterday. But we shall see. I'm very curious what happens when regular trading hours open up.
Sounds good. Nice initial bit here. Sean, Dynatrades, would you like to introduce yourself as well? Maybe it's Dynatrades? Dynatrades? Just got to unmute. I do see you up here on stage, so there's a little...
Oh, sorry about that. I just wanted to say thank you first off for having me. And I go by Dynatrades, and I've been trading futures for about a year. And I'm part of the ADEX Trades Discord, and I've been like trading with them since from last year. And I attended Sean's workshop, and through that it's been helping me just get my trading back even better. Just the mental aspect of it. I think that's about it, unless there's something else anything else you want me to cover right now.
No, that sounds good off the bat. Thanks for being here, Dina.
Sure.
Absolutely. All right, Sean, let me pop it back at you. Initial thoughts before we go into the psychology stuff. We can talk the market for a second. It's
Sure.
been market for the last couple of weeks, a lot of chop. Curious to get your take on the overall gist of where you see this going and how you've been approaching it.
I'll tell you, I'll be very honest. I've been trading minimally because of that. You know, I think that it's really easy to get lulled into. So let me back up. There's a thing that all people do called habituation. It's just a fancy way of saying we get used to something. So this range we've been in, you know, I think when days like yesterday happen, it's really easy to get, we're more susceptible to like euphoria and whatnot. So for me, it's about taking profits, you know, not getting hopeful that the range is finally going to break. I mean, I would be ecstatic if this range broke. I don't even care which way it breaks, to be perfectly honest, in terms of trading. But I think, you know, with days like yesterday, for me, it's important to not look too far ahead except to my next trade. And, you know, like I was saying before, we have a pretty, not a big set, but we have a set of single prints from like 40.51, I think, to 64. And, you know, single prints represent emotional trading. For those that don't trade market structure, a single print is when there's a single row, a single TPO of price action. A TPO is a 30-minute period of price action. TPO stands for time price opportunity. It's a type of chart if you don't know, if you're not into that. And it represents emotional buying or selling. So yesterday we had that little rip. So in theory, there's shorts trapped in that position. And when the price action comes down in there, also in theory, there should be bids because the shorts looking to untrap themselves. And a good thing to remember, trading psychology wise, is shorts are always buyers. Shorts are forced buyers sometimes. And so today I'm looking for the price action in that area. I want to see, you know, buying come. If I'm looking upside, I want to see buying come in. I want to see these guys tripping over themselves to get themselves covered and out. That's also evidence of bullishness. And, you know, in the opposite is true as well. Like if price falls through there and then, you know, we don't see action get back up, you know, I'm ready to go short. And so far this month, single prints haven't lasted. A lot of times sets of single prints will hold the market up. They'll move the market up. And because we haven't seen that, I'm really in patient mode and trying to use it as an opportunity to practice patience, take profits, and you know, really think about more long term. I think one of the less popular interventions for trading psychology is investing, and you know, taking your profits out and putting them in something that's working for you, and you don't have to be risking every day. reducing the amount of threat in your daily life and portfolio is one of the better things you can do for trading psychology. So that's kind of where my head is at as of late.
Fantastic, Sean. Dina, how about yourself?
As far as the markets, yeah, I mean, overall, I'm more bullish than bearish just because of the trend. We're making higher highs, lower highs. So overall, I do see more upside. But because we had such a huge range and because we were coiling really tightly, past for a while there. So that's why we had a nice push up yesterday. It is OPEX week, so you have to be cognizant of that they like to be more manipulative during this week. So they're more likely to trap everybody, essentially, whether you're long, whether you're short. That's kind of the how they try to, maximize their gains, essentially. So I would, except for going into the end of the week, I would like, ideally, for us to come down, retrace a little bit, and then go back to the upside. That's how I'm looking at it. It looks like for the overnight session, they all, ES, NQ, YM, they all took out their highs of the day for yesterday. And now it looks like we're just coming back in a little bit. So we just need to see it open if they do want to come down and kind of take profits and then go back to the upside. But overall, I do like more the bullish direction, personally.
All right, leaning bullish. Appreciate it, Dina. Eric, do we have you behind the account today?
Yes, there's me behind the account today.
Fantastic. Would you like to chip in some thoughts here on market direction? How you've been trading?
No, I mean it's been overall aside from yesterday, it's been kind of choppy. So it's kind of one of those days where you kind of wait, and then you get a bunch of false moves, and it's just been. I personally found it annoying, and then yesterday, of course, did something dumb because I was used to the shop. Then I'm like, okay, sure, it'll turn around, right? Nope. Okay, well, done with that day. So that's just in the reset button. I mean, there's so much news out there about things that are going to move the market, and then in the news release, CPI, whatever, and NFP, everything gets released, and then nothing happens. You're like, okay, so what are we really waiting on? Is it just summer doldrums? Kind of early for that. I know the debt ceiling is one of those big supposed movers, but I'm like, I don't really know what is going on with that. I don't know if anyone really knows. So right now, just trying to take a trade, just level to level, really at this point, just kind of follow the order flow, and it's been sometimes a little difficult. Other than that, it's been your typical chop.
Makes sense to me. Appreciate the little rundown there. All right, Sean, I know, as we kind of go through this, we'll mix in between some of the market talk and some pieces like this, but I know we've hit on a lot of trading psychology as well here. So perhaps, as we're kind of warming up, markets getting open, you could just hit us with a little bit on, what even led you to trading psychology and what your approach is to it, and we'll kind of start there.
So, thanks for the question. So I've been a psychotherapist for 20 years, and what got me into trading in general were weed stocks. I found it amazing that marijuana was trading publicly, and it got me into the OTC markets, which is a very we're just opening up, which is a very tricky place to start trading. So what I did was, when I moved out of working for the man, the last time I had a private practice, and what I started to do was I really fell in love with trading. So what I started to do was I started to schedule my clients around prime trading times, which also ended up kind of building in a good habit of, I would schedule clients from, 9 to 10 and at noon, and then after 2, and it kind of kept me in the prime trading hours. And, one of the reasons I really enjoyed it is therapists, we do okay, but it's not the most lucrative profession in the world. And there came to this point where I was like, what am I going to do? I don't want to work till I'm 65. I don't want to, be in that rat race and stressing. So it became, a combination of this thing I really enjoyed, but also an alternative income or an additional income. So that's really where my, interest in and then eventually love for trading started. And to be honest, one of the things that really got me into the psychology part of it, despite the fact I've been in the business for 20 years, was I realized the impact that a loss had on me. Well, when I was trading, I'd lost a very close childhood friend unexpectedly when I was in my late 30s, and I realized I was doing all this ridiculous stuff. I was just like trading to kind of avoid the pain of it. And that's when I was like, holy crap. And I really dove in hard to trading psychology, and I just have never looked back.
Really good stuff there, Sean. Yeah, it's interesting how you were able to kind of pull it into this world of trading. And I think the people, when they think of trading psychology, they think of figuring out a plan, fixing their mistakes. What does it mean to you when you integrate it with trading? Where do most people kind of see it fitting in necessarily?
I think there's kind of a couple levels of trading psychology. Like there is the the kind of common stuff you hear all the time, FOMO and chasing and building patience and discipline, and all that stuff is super important, obviously. But I think that what people don't always look at is how they bring their patterns into trading. Like humans, we're wired to repeat our childhoods. We're wired to repeat what we're used to, is maybe a better way to put it. If we're used to being treated a certain way, if we're used to certain dynamics in our life, we will repeat them. That's why the easiest way to see it is look at your relationship history. We tend to like date the same person or repeat those same mistakes, and that's because human beings like homeostasis. The body likes what it likes. The body and mind get used to something, and we get stuck with it. So when it comes to the psychology piece, the piece that I think that especially retail folks meet, because retail people have different personalities than professional traders do a lot of the times. A lot of the issues we bump into is a lack of awareness in that realm, and a lack of insight into how our mindset, you could call it, changes when that bell rings, and how, once we have this opportunity in front of us to potentially make a bunch of money, that we get what they call a restricted field of consciousness, or a fancy term for tunnel vision, and how that affects our behaviors and choices. And that's where trading psychology can get deep. And that's where I think people need a plan, a trade psych plan, along with their regular trading plan, because if you don't have a trade psych plan, you won't stick to your plan. So your plan becomes useless.
So let's talk about that in kind of some market terms as well. So when you look at the market, it's opening up today. We've got SPY down a little, right? SP 500 down a little. Kind of in the middle ground here. How do you kind of look at this, like on average trading day, and walk me through like where you would see the market opening up like this, and then how are you kind of incorporating your trade psych and your education into what's actively happening on the charts right here?
So in real time already today, I've checked in with myself in terms of what I call a feel score. It's like, you could think of it as an emotional VIX, and everything starts there. So I use a scale that runs from -5 to +5, and that's just overall emotionality. That includes emotions, that includes what's going on in my life, that includes how I feel physically, which is one also people tend to ignore when they think psychology. They don't necessarily think physical. So it's assessing, am I in a good enough state to even look at what's going on? I'm also, considering how was I feeling yesterday, because yesterday was a pretty good day for me, and there was definitely that kind of euphoria of like, oh shit, we got this nice move. I happened to be in for a nice bit of it, and so what it's created in my head when I noticed it last night was hope. I noticed, I'd love, I really would love to see this break out, finally break, what is it, 4211's been our top for a nice chunk of time now. And I'm mindful of, all right, there's this part of me that is really wanting this. So when I'm watching this market open, I'm going to be looking for my bias to get reinforced. And I have to be mindful of, all right, this is what's been happening the past 24 hours. And I'm looking for anything that reinforces that. So like right now, the market is, sorry, I actually turned off my computer for a sec to focus, but let me turn it back on. So we're actually, we're opening up in a very small range. So that's data I want to consider, right? What does that tell us? Hang on, I've got to get my charts moved over here. So we moved down from when we hit 81 overnight, and now we're chopping. So there's ambivalence right now, and I have to embrace that right now there is that, and look at it as an opportunity to practice patience. A lot of times people are looking for opportunities to make money, and that, like, obviously, right? But to me, the opportunities are generally practicing patience and waiting for that setup. So that's what I'm doing right now. And having considered everything that's going on around me, having considered how I'm feeling, I'm pretty confident that right now I can be objective. If I'm outside, if I'm in the high or low edge of that emotional VIX I was talking about, I walk. I do something to either ground myself, I do some breath work, I do whatever to sort of go back, clear my head, come back and look at the markets. The other big piece of the puzzle is keeping in mind the big picture psychologically. People talk a lot about, higher time frames and trends, and like that's obvious. You have to do that. But how are you doing that psychologically? And what is the higher time frame and trend psychologically? And that's things like what's meaningful to you in your life, what matters to you, why you trade, and keeping that stuff in mind. Is where good risk management comes in, and we can talk about that as we go along too. I'll give you guys a pause though to digest that, or any questions about that.
Yeah, I think that's really, really helpful. Dina, do you have a comment what John just shared there?
Yeah, I mean, I think beyond the trading, like the technical aspect of trading, because then when you're in the beginning, that's what you have to focus on, right? Because you don't know anything, and it just like all you see is these like things moving, and learning the technical is what the first priority is. But once you have the technical down, it's all psychology. It's basically if your mental game is strong, then you will be successful. If you could be the best technical trader in the world, but if you can't control your emotions when you're trading, you won't be successful, essentially. And as far as for me, it's a continuous, constant process, because you'll go through stages where you're like really everything is just flowing and you're in the zone and you're like, okay, I got this and it's all good. And that is like the most dangerous personally for me when I feel like that, because as soon as I get that emotion, the market comes and it humbles me completely. And then you're like back to square one and rethinking what am I doing? How, like everything was going so well. So just the psychology and the day to day, and then in particular, especially with Sean's workshop, of just having the steps, going step by step of checking in and taking your emotional temperature every single day. You don't think about that when you're in the middle of a trade or before, like to start your day off with focusing on, okay, how am I feeling? Because whatever you're going through in your own life will affect your trading. Whether you want to, accept it or acknowledge it, it always does. If you're having a bad day or you had a fight, it's going to affect your trading. If you're tired, whatever, it has an effect. And being aware of that is huge, because if you can be aware of that, then having that information then you can actually do something about it. You're like, okay, these are the times of when I'm stressed out. These are the times thing. And if I'm feeling that way, how does it affect my trading? And that's the importance also of journaling. You have to keep not just a journal of your entries, your exits, your P&L, but how were you feeling on those days when everything went really well? And how did you feel? And then on the days that everything is falling apart, how do you feel on those days? So it's just basically really fine tuning your emotional intelligence essentially. And it's just, yeah, it's a constant, it never ends essentially. And just doing it, one of the things I really loved that Sean has us do is setting random timers. So that throughout the day, just randomly your timer will go off and you have to take a pause and just, okay, how am I feeling in this moment? And then based on your score, you will either continue to trade or you will step back and maybe take a walk or, do something else. But it just that, I mean, like, that really is the key. Just like, even if you read all the great traders, that's what they all have. It's the same thing with people who are excellent at sports. They're mentally strong. So just really, I think more than the technical, the mental part is like what you really need to fine tune and work on every single day. It never ends. It's just a constant, continuous thing where you'll go be good and then it'll fall apart.
Awesome rundown there. Thank you, Dina. Hey, Eric, do you want to throw any thoughts in this conversation we're having? How you apply some of this stuff?
Yeah, no, it's one of those things that's like, oh yeah, this all makes really good sense, and it's great. And then when you're in the trenches, so to speak, you realize, what the hell am I doing? That's at least that's for me. So I like the idea that Dina just came up with having timers. I'm like, oh, that actually would be great because I always have this intention of like, okay, I'm going to enter this trade, and if it goes wrong, I'm going to cut it, whatever. And then if it should be a short one, whatever my time limit. Then when it goes wrong, the funny thing is that you kind of ignore all that. And you're like, well, crap. I'm just going to hold this. It's going to come back. It'll come back. I'll break even somehow. And then just kind of escalates. And you're like, what am I doing? I wasn't supposed to hold this for like the entire day and watch it just bleed me out, right? It's just one of those things that seems so easy to do. But I think it's having a timer there too to reassess is also one of the things that would really help just break that almost like tunnel vision, so to speak. I'm like, okay, well, now you're focused on this. What have you been doing? It's been an hour. It's not working. Why are you still in this? Instead of having that, you'd be, 5 minutes, 10 minutes in, you're like, okay, this is clearly not working. I should stick to the strategy and just cut it, right? I know that happens to a lot of people. It's just, when you're in it with no one standing over your shoulders, your own trades and accountable to yourself, but also you're also accountable to whatever loved ones you have. It's just one of those things you got to remember. Yes, you're doing this by yourself, but you're not doing it for yourself. It is one of those life-changing thoughts to really realize when in the trade instead of just your pride. That's what I think, anyways.
Sweet. Yeah, good points. Sean?
Excellent points. And to what pardon me, to what Eric is saying, that the random alarm piece, and thanks for bringing that up. And actually, Dina's also, I really appreciate what you've said so far, Dina. And even as she's discussing it today, Dina exhibits a quality in traders that is a little too rare, and the quality is vulnerability and openness. And Dina works. Like, we have a private chat room in the Elite Trader Funding Discord for workshop members, and she's in there, open, honest, discussing what's going on, processing, and you hear that when she talks, and like it's such a huge thing that just doesn't happen enough for traders, because that helps you do that psychological work that we don't do enough. And to Eric's point and Dina's point about the random alarm, what that does is it does break that tunnel vision, because it's so easy to get caught up in the trade and lose the higher time frames, just like we do with a chart. You know, you get sucked into a 1 minute chart, 3 minute chart, 5 minute chart, whatever time frames you trade, and all of a sudden you're long, and you realize, oh Jesus, if I was looking at an hour, a 4 hour, or the daily trend, like why would I be doing this? And we need to have that psychologically, so that the random reminder piece, and there's only a couple on the market that I know of, but randomly remind me, and Yap. Yap is Apple only, and this thing they're talking about is, you know, between whatever hours you trade. Like for me, I almost never trade before 10:30 Eastern, and I very rarely trade after 2:30 Eastern. So between in that window of time, I have these apps set to randomly go off 5 times. And the random piece is super important because intermittent reinforcement is the strongest reinforcer of human behavior. And because if you just set it to go off every hour or every half hour, or just like, you know, put regular times in your phone to ding, it's not as powerful. Now, if you're doing nothing, and, you know, hell, do it. But the random piece brings an element of human behavior and the psychology of human behavior that is above and beyond, and that's the intermittent reinforcer, because you don't want to see it coming. Because if you know when the alarm's going to go off, it's easy to habituate to it or get used to it, and you can kind of ignore it. Just like anything in our lives, like we'll try to build a habit, and all of a sudden we're kind of, you know, we stop doing it. That alarm goes off at 5:30 a.m. to hit the gym, and then we're like, oh, F that, and we, you know, roll over. There has to be some randomness involved to build that habit, and then you can not get lulled into that shit that we get lulled into when we're trading, and you know, engage in those typical behaviors everyone talks about of, you know, whatever, FOMOing or chasing or revenge trading, or, you know, our emotions get the best of us and we get, you know, we get myopic. And myopia is when we're overly focused on one thing, on a narrow view, and that's just such a dangerous thing when trading, is to be too focused on that one little aspect of the market, when the market is such a complex and dynamic thing.
Really nice rundown there. Hey, real quick, while I see him up here, Blake, I know that I think you are a futures trader as well. And I appreciate you hopping up. We're talking on the psychology and the education side, as well as the market. If there's anything in the market that you are trading right now, I'd love to hear it. And then if you have any thoughts on the psychology side we've been talking about, that would be great as well.
Yeah, pleasure to be up here, Gav. Thanks for pulling me up, man. So far, it's been a great conversation. Been enjoying just listening. Just some of my 2 cents. You know, if you guys don't know who I am, I've been a trader for over a decade. I've been trading futures for over 7 years. Been in crypto for about a decade as well. Futures has really been my bread and butter of what I trade. And more recently, I've been trading a lot of crypto as well. So one of the things that I've really come to realize over my years of trading is that consistency is the most important aspect that you can do for yourself in any aspect of life. And, you know, the reason that I say that is because it's really easy to have a couple good trades here and there, and you know, you get high and you feel like, oh, nothing can stop me, and then before you know it, you're over positioned and you're oversized and you're married to a trade. And, you know, like I heard earlier, you know, some of you get myopic and you start, you know, bleeding out the trade that you're in. It's really, really important to build discipline and structure in your life, not just in trading. So the most successful traders and investors that I personally know are people that are really structured and have a high level of discipline with their own habits in their life. So, for example, if you're somebody who, you know, wants to get in shape, but you've been trying to get in shape for the past decade and it just hasn't happened, I would recommend trying to first achieve that goal to really build that mental fortitude and that discipline within yourself, to really, you know, achieve that goal first. And then knowing that, okay, I can, you know, really focus and hone in and become structured and regimented and disciplined when I really want to do that. Then I would say, yeah, let's go ahead and take the stab at trading. Because it's the biggest downfall to most traders. You hear people that say that, you know, I was trading for a few years, I did really good, and then I blew up an account. 9 times out of 10, the reason that they blow up their account is because they lost that structure. They lost that discipline. They lost their rules, so to speak. And, it still happens to me today. Not everybody is perfect. For example, I got into a trade on Bitcoin early in the morning. We had a nice, 5-minute reversal candle. If you guys pull up yesterday's chart on Bitcoin, I got in early on that trade. We bull flagged, for about 30 minutes, just moving sideways, and made a nice pop to the upside. Well, it just so happened that I had an Orange Theory appointment that I needed to get to. If you guys don't know what Orange Theory is, it's just a high intensity fitness facility, and I wasn't going to be able to have access to my phone. So I said, you know what? I'm just going to go ahead and close out this trade. I'm up on the day. Whatever happens, happens. I'm happy with my profits. I closed out the trade, went to the gym, get back to the car, and I check my phone, and Bitcoin is up another like $800 from where I exited. And it was the FOMO of seeing that and realizing, man, I could have made so much more money had I just stayed in the trade, but I didn't want to be micromanaging the trade at the gym. And so when I got back, I was revenge trading, trying to make back the more money I could have made, and actually wound up giving back my profits on the day. And so my structure says, if I'm green on the day and if I go back to break even, that's it, because I know where that leads psychologically. And that's one of the biggest factors of trading, is understanding how you personally react and how you personally handle specific situations in life and specific situations in trading. So you can kind of, put a safety net there for yourself. So you're not, going, totally, revenge trading mode, and you're just, trading every single thing that you can. So, yeah, I think consistency and discipline and building structure in your own life is like a foundational core requirement for anybody who wants to be consistent at being successful in trading the markets, whatever market that is that you trade. So, just from the psychological perspective, from that, yeah, I think consistency and discipline and building structure in your own life is absolutely essential if you want to be successful in trading.
Really nice rundown there, Blake. Sean, would love to throw it right to you, see if you have any thoughts along those lines.
Sure. Thanks for sharing, Blake. A couple things come to mind when Blake talks about that, because discipline and consistency and all those things are obviously super important when it comes to trading. And discipline is a really rich, it's a complicated concept, because discipline, you can think, if you think about I think of discipline as like a skyscraper. Skyscrapers are big, strong, they are consistent, they're stable. But the trick when it comes to discipline is that, using that metaphor, is a skyscraper is made up of a tremendous amount of other things, a tremendous amount of materials. It's I-beams, it's bricks, it's whatever, cinder blocks. It's a lot of things, and even deeper than that, it's the freaking sand that and lime that goes into the concrete that builds the foundation that the I-beams are put into to build this thing. So it's structure's made up of discipline's made up of 1,000 decisions every day, these little things. And to me, in order to even achieve that kind of thing, you have to be pretty mindful and pay attention to the present often, and pay attention to why it matters. Like, Blake, there's a reason I forget the thing you mentioned, the gym you mentioned, but there's a reason you go to a high intensity gym. It matters to you for some reason, so you act on that behavior. And that's the kind of stuff we need to apply to trading, because discipline doesn't necessarily cut across context. That's what's tricky about it, is because some things mean more to us than others. Like, people will go to the gym, but they won't put time into their relationship, for example. Or the thing that I've seen a lot with people I work with individually is, like, this person will be they could be a bodybuilder, like very disciplined, like uber disciplined, takes great care of the health, crushes the gym, all that shit. But if I suggest to them take a day off of trading, they can't do it. That's also discipline. Not trading is discipline. Patience is discipline. It just isn't sexy discipline because it's not crushing a trade. It's not making a multi-bagger. But that's where the rubber hits the road. And because you can be really disciplined in one area, or like really be put together in one area, doesn't necessarily mean you will as trading. And that it also doesn't mean you won't be. So the point is this: you have to understand yourself and who you are and what you bring into the market. For some people, it will cut across that context in the trading, but for others, it won't. And that's okay. And one of the things about a lot of trading psychology that you see out there, it's discussed by professional traders, which is great, and comes from a kind of an advice-based model, which is fine, except that a lot of times the advice-based models are based on their own experience and who they are and their personality and their life, and that doesn't necessarily apply to you. So you have to understand what you bring to the table. And as I assume there's a lot of retail traders listening, some retail traders might not make it as a pro trader, but could make it as a retail trader, and that's because pros have different personalities. Gav, you were at Goldman. I mean, I'm sure amongst the executing traders there, you see certain personality characteristics in them, certain consistencies in them, and retail people might not have that way about them. They might not have that type A-ness about them, and so they might not make it on Wall Street or on a prop desk, or at a family firm or whatever, but they can make it in retail. It's just that we have to build on and create a system for ourselves that incorporates our psychology into the risk management that those guys may have already kind of built in the personality, and then B, literally have risk managers breathing down their neck saying don't do stupid shit or you're fired. We have to create our own consequences, and that's just massively important.
Really nice rundown there, Sean. Love everything you're covering. Dina, real quick before I come to you, I want to mention this, Sean. We got about till 10:15 today. We're doing a full hour here from 9:15 to 10:15, and then we're going to open up for some more live trading. I know that you do some awesome work as well with Elite Trader Funding, like myself. And so I just point those that are interested. Obviously, we haven't been placing future trades today. That's something that we typically do on Thursday mornings. We felt it was important to lean into the psychology side and really lay down that education for everybody. But for those that are looking to get into futures trading, one of the things that we typically talk about is, a lot of my audience trades options. I trade options, and we're very familiar with the things that can go against you with options, right? How hard it is because you need to get the right move in the right direction at the right time, right? There's so many pieces to it. Theta can go against you. IV can go against you. You can have the stock just chop right there for a while. There's a lot of things that can happen. And for those that are looking for these exponential moves, they can often find it in futures, right? Without having to worry about, hey, if it just sits here for 10 minutes, I'm going to lose 20% of this contract. So I do encourage my audience, if you are someone that has been trading options, take a look at this stuff. Hopefully you're finding the educational side very interesting. What I'd point you to, if you want to check it out, is we have a link pinned in the top of the space. And this is, I think, a good way to start out because, of course, if you're looking for volatility, that can come with big wins, big losses. And so you don't want to necessarily go and say, hey, I've got $10,000 that I can put into an account right now and go trade with this. Instead, what you should do is you should practice first, right? Practice is important. And I recommend doing it through one of the simulators that we have in that link that's pinned to the top of the space. There's still, some real money behind it, right? I think if you use the code gets automatically applied when you get to the checkout page. It's like a 30% discount. So you're ending up spending whatever it is, 30, 40, $50 to be part of the simulator. But that puts real money on the line, but not $10,000. And then if you do beat these simulators, they'll go ahead and they'll fund your account. That's what Elite Trader Funding does with many others. They'll fund those accounts. That way you are trading with the money in that funded account, not necessarily all of your own money that you can't afford to lose. And then there's basically a rev split from that. So I do recommend checking it out if you've been interested in this, if you've been looking, hey, what's the way to get into future trading? So I think there's a lot of ways to go about it, but that has been what's working well for me. And I feel much more comfortable personally learning my way through it on there, and then going into the real money and other sides like that. And ultimately, ideally, most people are making it through getting the funded account and doing it that way. So a couple just pieces I wanted to cover there, and those links are in the top of the space. Blake, did you have a quick comment on that?
Yeah, I just wanted to make a comment on some of the retail traders and people that might not be too familiar with futures. So there are micro futures contracts, which are I think it's like a tenth of the cost of an actual futures contract. The thing is, there, if you are trading those, be mindful of whatever fees you're incurring with the platform that you're on. So it doesn't take a ton of capital to get into trading futures. So just wanted to make that note.
There you go. Dina, do you got any comments on some of the stuff we've covered here?
Yeah, I just wanted to add to what you said. I loved about that with options, going from options to futures. When I first started trading, I started with options, and I loved it because it was just you're not investing a lot, but you're reaping a lot, right? So because of that, it's very attractive. But that was the issue, like you mentioned. It's just with options, the challenge I always had, which I struggled with, was I could have direction right, I could have just everything. My targets would be right, everything would be lining up beautifully, but because of the Greeks, in particular, theta would just eat it all up. So I could be in profit, but when I closed it out, I would close out red just because of the theta. And depending on how volatile the stocks are, for example, I used to love trading Tesla. The volatility on that is so much that the theta is like disproportionately high. And that was my frustration with options, because it's like, okay, I'm getting it, I got it, but why am I still red? What is going on? And then I was in our group, we have OG Trades. I don't know if you've had him, but he does futures. And through his going through futures and his recommendation of futures, it has like having all the benefits of options essentially without worrying about the Greeks. And that was what got me interested in finding out more about futures, because essentially when I didn't know anything, it seems very scary. You're like, okay, these things are moving they don't stop trading. It's moving so fast. It's just like, will I be able to handle that? But once I started with micros and just, paper trading it and practicing it, it was very freeing for me. I mean, and then once I went over, I haven't looked back. I was hooked. Just not having to worry about the theta. And because I trade price action, that's all you have to worry about, essentially. You're just look at the market structure, look at where we are, and you enter from where you enter and you get out, and you don't have to worry about all the extra things that come into with options. And because it is leveraged, what you're putting in, the benefits of how much you make from it is also great. That's why I think so many people fall in love with it. For whoever, if you go from options to futures, a lot of them will just never go back to options because it's so much easier trading the futures. But just as long as you're aware of the risks of, because it is leveraged and it's a higher leverage and you have to worry about the drawdown more than with options. If you can figure out those nuances and really understand them when you're trading, like paper trading it, and then just start small, I think that's that's the ideal way of doing it. And for me personally, when I first started, after I'd done the paper trading, it went well. I decided, okay, I'm going to start small. I don't want to go big. So I got a Tradeoway account and I put in maybe $300. And even though it was just 300 and I was trading micros, because I didn't fully understand the drawdown, which is different from how options work, with the futures, it's because each contract, the leverage they're holding against your account is what is taking into place. So you just have to know that. And so I ended up, options, I could let it go red for a while before, waiting for it to go in profit if I had bought time. But with the futures, because I hadn't fully understood that, I had taken like a loss of maybe like 5 to 10 ticks or something. And I'm thinking, okay, that's not a big deal. You know, it's like 10 ticks, it's like $12, $20, whatever, right? But because of the margin on each of those contracts, it takes you, like, it wipes out your account because of that if you're not aware. So in that sense, that's why I really loved with ETF and the prop firms, and just because it gives you the freedom to be able to trade it without the risk of your own capital. And through that, I was able to follow the rules and really understand the nuances of how to actually trade it. So for me, that was a really good learning experience of just, you know, how do I practice without investing so much, you know, of my own money. I hope that made sense.
Yep, that was definitely a really good rundown, I think, on the futures side of things. Okay, awesome. We got about 9 minutes left here, so Sean, I'll try to get through a few more of these questions, but I've just been loving the conversation that we.
Great.
Kind of curious, you know, what do you see costing traders the most money? Because I think that's something people would love to dig into.
Well, Dina just touched on one of them. Set stops, MFers. Stops. You know, when it comes to futures trading, because of the leverage and drawdown, you know, they're huge. And, you know, stops are self-respect. Stops are respecting your goals, your family, your loved ones, your future. So set them. But the thing that I would say that I see affecting traders, costing traders the most money overall, is a lack of insight and awareness. We pay a lot of lip service to TradePsych and don't do enough work in general, and that holds true for, you know, trading in general. I mean, you know, the dirty secret of trading psychology is the best intervention is having a reliable, repeatable system and understanding understanding trading, for God's sakes. Not enough people do that. And then then comes in the lack of awareness and insight. Like a very wise friend just put to me, you know, if you go throughout the day and you're not paying attention, you get sucked into that restricted field of consciousness, that tunnel vision, as you put it. It's like getting drunk, and you get, you know, you're not aware of it as you're getting drunk, and as you get intoxicated or stoned, whatever, as you get intoxicated, you become myopic, you become more narrowly focused, or some people call it disinhibited, and then you do regrettable behavior, you engage in regrettable behavior. So that lack of insight, whether it's into the life experiences that you bring into the market and the patterns you're repeating, like for just common things, you know, if you're a perfectionist, you know, that is the enemy of success. You know, if you have trouble setting boundaries and saying no to people in your life, you're going to have trouble setting boundaries and saying no to the market. You know, if you have trouble with trust issues in your life, you're going to have trouble trusting yourself. You have to look at yourself first and foremost and understand yourself, know thyself, and leverage it in your favor in the market versus letting it destroy you. Also, the sense of awareness in terms of, like, how is my life going lately? Did I fight with my wife last night or whatever? Like, am I feeling guilty I didn't go to my kid's game because I'm spending too much time trading? You know, look at your environment, what's going on. And then intraday, in the present moment, and the only present moment intraday is price action. Am I even able to be in the present moment? Am I always looking to the future? Am I always hoping? You know, am I, you know, why is it that I'm repeating these behaviors despite the fact I know better? The efforts put into self-awareness the lack of efforts put into self-awareness and insight and emotional intelligence costs people money. It's the thing I see keep people across the board most commonly.
Yeah, that definitely makes sense. Hey, Eric, would love to put you back into it as well. We've had some really good conversations around here. Anything that you see, you know, costing people specifically the most money? And then on the other side, do you want to maybe just hit on what I was talking about? If there are any other pieces you wanted to throw on the simulators that you guys run?
Yeah, no, I think it's really interesting about, you know, everyone talks about trading as kind of your opponent is yourself. I mean, and you know, for the most part, that is true. It is, you can have all these ideas and have all these setups that work perfectly, and yet somehow you can still mess it all up. And the only person that's messing it all up is yourself, right? So it's the person in the mirror that you got to look at. Like Sean's saying, know thyself. It's one of those things that are like, I can know myself. I know what I'm about to do. And sometimes I'm like, this is stupid. I'm going to do this anyways. And it's like, okay, well, and I knew it was stupid. And it's happened, right? But as you, I guess, build that discipline in, right? Your habits of really just like, okay, this is really bad. You just need to walk away, or you need to really be patient. Just depending on the trade, right? That's one of those things that is so hard to do. Like, yeah, it makes sense after the fact, but when you're staring at it, you're like, man, I need to make this money back, or I missed this gigantic move. Why am I an idiot? It's not so easy, right? But then it's the whole thing is one of those ways of looking at it, it's like, you got to live to trade another day, man. Like, it's not if you blow your account up, it's gone, right? Which does lead me to bring that the nice thing about ETF is that we do offer these evals where that you can learn, and it's one of those things that you'll learn through trading. You'll learn more about yourself than you ever really thought you thought there was to you, because you'll learn all your bad habits. Everything will be exposed, and at the end of the day, you only got yourself to blame, right? Yeah, there'll be some trades that you really couldn't help, or stop loss runs, stop hunts, whatever you want to call it, news releases. But it's one of those things that we have all these evals that are kind of built so that your personality, depending on how much risk you want to take and how much you want to do, that we give you the option to take a look at it and really choose your trading methodology, really, and then strategy. So if you guys are interested, please come over to our site, come to our Discord. We have a great customer service team, best in the industry, that will get your questions answered as well. So it's why we also partner with people like Sean, who we really believe in making traders better. And one of the better things that you got to do is learn about yourself and really understand the psychology behind it. So, but yeah, I've loved everything that's been going on today, and thank you, Dina and Blake as well, because the insights have just been fantastic. Because over time, you just know the experiences, you'll see it all, and you'll learn so much more about yourself over the years.
Perfect. Okay. Really enjoying kind of the back and forth there. Love the point. Sean, do you have anything else you want to throw on the back of that? Okay. Not hearing from Sean. Well,
Sorry about that.
Oh, yeah, go for it.
I just want to say thanks for having me. Eric, thanks for having me on. Dina, it's great to hear from you again, and I really appreciate your thoughts, Blake, as well. And you know, I think the thing I would leave people with is remember the other side of risk management. Risk exists because of threat, and the way we manage the threat against our capital dictates a tremendous amount of our behavior. It's the reason, Eric makes that point about, oh, I know I should do something, but I don't do it. That's because of threat. The way you manage threat will be the way that you manage your success. So make sure you're taking a good look at yourself.
Yeah, I think that's a huge point for sure. And then Sean, the last thing I'll say is we're saying a lot of stuff to people, but I want to keep it super actionable. If people are going to go and do 1, 2, 3 things following up on this space, what would you recommend?
Check your emotional VIX. Get the random alarm. Set it. Check your emotional VIX at least 5 times a day at random, ideally. Score it from use a score that runs from a negative to a positive, because positive is just as dangerous as negative. That's step 1. Step 2, if you are particularly high or low on that scale, I always say outside the 3s. If you're using a scale of -5 to +5, don't trade. Cut your trade and get out. You have a zillion other opportunities. Don't worry about it. Get out of there. When you're at the outer edges, you're going to be less objective. You're going to have that tunnel vision. It's dangerous. So step 3, if you are on those outer edges, grounding. Google grounding exercises and do them. If you're in the middle of those, if you are in the middle, great, keep trading, but do breath work. Practice some mindfulness. Step 4, after you do those things and you decide what you're going to do, ask yourself out loud, make sure you do it out loud. What is my bias today? What am I hoping for today? And is my behavior acting in service of, or is it moving me towards my values and what's important to me, or is my behavior moving me away from my values and what's important to me? We have to make meaning to build on risk management as retail traders. We don't have people breathing down our necks. We don't have the same benefits that professional traders do, and we have to create them ourselves. So that's the fourth step. Am I moving myself away from or towards what's important to me? What is my bias? Am I acting biased? And say them out loud. Do not say them to yourself. That makes a difference in terms of how your brain processes it. So those would be the 4 major steps I would say start with today.
All right, perfect. Thank you so much, Sean. We're going to keep this space open. We're going to have an interesting topic coming up, but I want to thank everybody that attended for the futures trading and psychology portion. Blake, would love to have you on for this next one. We're actually talking about investing in artificial intelligence. So that is kind of going to be our next piece right here. So Sean, others, you're welcome to stay on. Dina, thank you so much for being on here as well. Did you have any other thoughts you want to share before we roll into that next space?
No, that was pretty much it. Thank you so much for having me. I really enjoyed it.
Perfect. Okay, well, thank you so much. And Eric, anything else from yourself?
No, it's been great. Thank you guys for all coming on, and thanks, Gav, for having us on as well, because it's been really great. So thanks for everyone.
Perfect. Okay, then we're going to talk